So the job market is a circus run by clowns. And the housing market liquidity crisis is putting companies out of business left and right. Meanwhile, Biden is proposing to send billions of dollars of U.S. taxpayers' money to other countries like Ukraine instead of helping the American people here at home, right here on U.S. soil. And guess what? Now this. Wells Fargo closes accounts, claiming high risk. This is very important, folks. We need to pay attention. They are really starting to show their true colors here. First it's the food, then it's the global conflicts, then it's limiting funds and transactions, and now they're just closing the bank accounts. Please pay attention, okay? Members of an informal economy experience banking discrimination yet again. And Wells Fargo is no stranger to pretty much like breaking the rules and doing whatever they want when it comes to banking. You guys remember a couple years ago when Wells Fargo had a string of employees, of bankers, of tellers, of account managers, basically committing identity theft and opening fake accounts to boost their numbers and increase their sales? Yeah, here we go. Dozens of the bank's clients had their banking accounts with Wells Fargo, now get this, canceled with no previous warning. Wells Fargo isn't the only bank doing this, and this has happened before, so please pay attention. Chase Bank, HSBC Bank also closed accounts without warnings too. Now, there's growing concern around being a public and recognizable banking customer involved in certain types of businesses. So this can range in a variety of different entrepreneurial and small business, self-employed business situations, but it could also apply to big businesses as well. Ultimately, the accounts that they deem are high risk. Other accounts at risk can include users, not even just the businesses. This can be the users of the bank accounts that conduct the transactions, the customers, the clients, basically. These can include users who use their bank accounts to pay for services that you probably wouldn't suspect would mark a red flag on your account. For instance, Tinder Platinum. Tinder Platinum and other relationship-based and dating apps and websites and services could potentially land your banking account, your checking account, Wells Fargo, possibly other banks, into being marked, flagged, potentially watched, or just completely closed altogether. There have been numerous reports of long-standing bank account holders with Wells Fargo having their accounts closed without precedent. Checking and savings and business accounts that had no infractions on any of their bank statements and received no warning that their accounts were at risk of closure, just completely wiped out and closed overnight. And there is reasonable expectation to believe that banks will begin denying accounts to others in fields and professions that they deem high risk. Now, this is very alarming because we still need the banks. If you want to conduct business, if you want to conduct business as a business owner, as an investor, and or even shop as a customer, like, you can't always pay cash. You can't pay cash online. So we kind of do need the banks still. So with that being said, you may want to start looking into other banks besides Wells Fargo, perhaps instead of Bank of America, instead of HSBC, instead of Chase, because their new policies that they're leaning towards, their previous sins are actually coming back to haunt them, and they too are potentially facing a liquidity crisis for the simple fact that they do engage in fractional reserve banking, so they don't keep a lot of cash on hand. There is a potential threat of bank runs as more and more folks are panicking and fearing of what is to come, and they also deem themselves as being high risk by carrying high risk customers, high risk accounts, high risk businesses that they support or supported in the past, and they're looking to distance themselves from that. When times are good, everybody's great, but when times are bad, you know what? It's been real, but you got to go. So banks like Chase, Bank of America, Citibank, they have reputations for participating in what is being labeled as occupational and financial discrimination. One previous Wells Fargo bank account holder reported that after a financial relationship with Wells Fargo lasting 22 years, she received notice that her account would be closed effective immediately. Now, this was after receiving a letter that said that the bank, here you go, get this. The bank sent a letter saying, we perform ongoing reviews of its account relationships in the connection with the bank's responsibilities to manage risk in its banking operations, and that the recipient's accounts will be closed as a result of this review. So, there's a lot of things potentially that could put your account in a position to be visible and stand out in these reviews. And as a result of these reviews, whether these reviews are human-based, where there's logic and emotion applied, or if they're just computer technology, AI, artificial intelligence, analytic, algorithm-based, then they could just have a few parameters set. And if you happen to meet any of those criteria, then your account could be closed and you're not even really a high-risk account. So just putting that out there. Several banks have expressed concern over the high rate of chargebacks on accounts associated with certain businesses. This is very important. Certain industries and customers and patrons of these industries basically put their accounts and the banks in a high-risk situation for the possibility of chargebacks. Now, I actually use an American Express card for pretty much all my purchases. Number one, I don't like having companies having access to my cash in the bank in a checking account. I don't like that, especially for the fact that you don't really know what you're going to get these days. So I want to have some form of recourse versus just trying to get my money back. So I use an American Express card for pretty much every single purchase. It gives me added protection. It extends my return policy in most cases. And it also allows for very simple and easy chargeback if need be. For instance, I actually, you guys know we moved and we canceled our home pest service in Georgia. And a week ago, they charged me again for the service. And it's a reoccurring thing, but it's like, no, we canceled. And, you guys know we canceled. You're just trying to see if you can get by and nobody will notice. Well, I get alerts with my credit card, my American Express credit card, for certain transactions over a certain threshold. And the threshold is pretty low. So I pretty much get an alert for everything. And so I went ahead and just charged it back. And I told American Express that we canceled this months ago, and this is a reoccurring charge, and it's basically I did not authorize this. And I'd much rather do that with a credit card than my own cash. You see what I'm saying? Because who knows? Maybe it was a legitimate charge, but somebody typed in the wrong number, and instead of $100, they pull $1,000 out of your account. Instead of pulling $1,000 out of your account, they pull $10,000 out of your account. See what I'm saying? So I like to use credit cards, especially American Express, because they provide the account holders with way more protection than the banks, than even Dave Ramsey saying, sure, credit cards are bad. You can get a debit card, you can get a check card, you can still have purchase protection. But in the meantime, your money is still tied up. Not in this situation. In this situation, American Express's money is tied up as they work on that dispute and that chargeback claim. But the simple fact of the matter is, chargebacks exist. Most of them are legitimate. Some of them are fraudulent. But the banks, and this is why I use American Express credit cards, the banks are looking at it as a high risk. So if the banks are looking at it as a high risk, then that should be a red flag to anybody else out there using their debit or their check card for pretty much all their purchases, thinking that they have this protection, that the bank says your account does have purchase protection and fraud protection, but it's still a high risk. And ultimately, at the end of the day, the bank could potentially lose money on these claims that are fraudulent, but then they'll look at your account and say, your account ultimately cost this bank money. Your account is a loser for this bank. So we're going to close this account permanently and stop losing money because of other businesses that you're engaging with, basically creating these fraudulent charges on your account and the bank being left holding the bag and having to pay for it. But stating that after purchasing materials, and this is from Wells Fargo, stating that after purchasing materials and or services, some customers demand their money back. Goes without saying. I just explained that. This is a reasonable expectation. But like I said, sometimes these chargebacks and these requests for refunds are unjust and they are scams, basically. And we've seen them all across the internet on different websites and different services that were popping up throughout the pandemic, where people were sitting at home on the couch idle with plenty of time and nothing really to do. So they would go out, they would spend the money, then they'd have buyer's remorse, but it was like somewhat of a digital service, so to speak. So they would try to charge it back. And the banks then get overwhelmed with chargebacks. They need additional employees to manage the chargebacks. And then if the claim goes through, the banks lose the money. And right now, businesses cannot afford to lose money. Like I said in the beginning, there's a liquidity crisis amongst many businesses that is going to come to a head, and it's going to hurt so many folks out there, starting with the housing industry, more than likely starting with the housing industry and some of these builders out there holding the bag on some of these properties and these new developments in these neighborhoods that aren't going to pan out as buyer confidence is reduced, jobs are lost, inflation keeps going up, interest rates keep rising to fight the inflation, and there's less confidence in the buying and selling of homes, ultimately bringing the housing market to a slow down, cool down period as that bubble starts to deflate. But staying on track here, according to banks, this could force them into a high-risk situation, and they do not want to be in a high-risk situation, not right now. However, account holders who have had their accounts suddenly closed without warning state that they had no problems previously with chargebacks, whether it was chargebacks against them as a business or initiating chargebacks as the account holder. But what is most concerning is that none of the account holders currently entangled with Wells Fargo were even using their accounts to process customer payments or anything like that. So their reasons and justifications seem to be wildly untrue and perhaps not true why they are actually closing folks' accounts after, get this, 22 years of being great, loyal customers. But this news has a lot of people and business owners on edge and scared and fearing the unknown, and for good reason. Why? Because for many who participate in similar informal economies, and it's 2022 going on 2023, and we have an informal economy. Business has evolved, business has changed. Entrepreneurship is completely different today than it was 20, 30 years ago. Influencers, adult theme educators, or independent online stores that could be deemed controversial to some, and the algorithms and the technology and the people reviewing these things. This is proof that a bank can remove a person's means of financial well-being simply due to bias against legal forms of labor, and this is just a troubling problem that I wanted you guys to be aware of, be cognizant of. I know Dan with I Allegedly, he had mentioned an account. It was actually, I think it was in Australia. It was a bank in Australia that basically just closed somebody's account. But it can happen here. It can happen in the U.S. It could happen to you. Wells Fargo is hitting the news with these accounts being closed with no warning, no regard to the customer, their relationship, the tenure, the age of the account, or anything like that. And they're just saying, hey, you're high risk. We don't want to have anything to do with it. You're out of here. So I want you guys to be aware of that. Please pay attention. I'm not saying go run to the bank and take all your money out, but I am saying to make sure that you're smart, you're doing things intelligently, you are creating a diverse strategy and plan so you have access to funds and safety measures in place just in case, money at home, money in the bank, cash in the safe, multiple accounts, different forms of currency and means of conducting transactions. Like I said, like the folks a couple weeks ago with the EBT and the SNAP food benefits program outage, you got to have a backup. You got to have a plan B, because if your only means is this one card, this one form of payment, that's it, and it goes down, what are you going to do? You're kind of stuck. You're up the creek without a paddle, and nobody wants that. You guys take care. Be safe. I got to get out of here because we're about to go hit this park, but I wanted to bring you guys this update because this is very, very important information that I came across late last night, and I wanted to bring it to you first thing this morning. And I will be working on bringing you guys another update later on today. Please be safe. Hit me up in the comments below. Links in the description if you want to check me out even further beyond YouTube. And you guys be safe. Take care. Talk to you later. Bye.